Look in your wallet. Pull the dollar bill out. See at the top where it says above all the other words, Federal Reserve Note? Even though it's printed by the U.S. Treasury, the bill comes from the Federal Reserve. That's how powerful the Federal Reserve System is in the United States. They influence the money and credit conditions of the U.S. They supervise and regulate banking institutions. They provide financial services to the U.S. government. The Federal Reserve System is today's topic on The Economist's Militia. Nearly every news article and television report about the American economy includes a reference to the Federal Reserve Bank. The current chairman, Ben Bernanke, and the immediate past chairman, Alan Greenspan, have become pop culture icons and are sometimes portrayed as cartoonish villains. But where did the Federal Reserve System come from? In an earlier episode, we talked about the central banks that rose and fell since the start of the country. Between the fall of the Second Bank of the United States in 1826 and the start of the current Federal Reserve System in 1913, the country used an ill-named independent treasury system. The independent treasury was set up after President Jackson started depositing all federal monies into the banks of his friends instead of into the Federal Central Bank. These banks, called pet banks by the press and by Jackson's opponents, immediately started speculating, and within 4 years caused a 5-year depression. The Panic of 1837, as it was later called, gave rise to requests for another federal bank, but Jackson's Democrat Party resisted, instead opting for a series of holding banks inside the U.S. Treasury. By 1863, a series of national banks cropped up, but none had the power of a true central bank. For nearly 80 years, the country flourished without a central bank. But, as is typical of government, when they see something working well, they try to fix it. The push for previous central banks had come from Republicans, and the drive to eliminate the central banks had come from Southern Democrats. In the early days of the 20th century, the Republicans again made a push for a central bank, an idea which was summarily rejected by the ruling Democrat Party. In fact, the language used in the 1912 elections sounded a lot like the 2008 and 2009 elections. Instead of cries of Main Street, not Wall Street, and Goldman Sachs is killing our country, they had cries of protect the public from the domination by what is known as the money trust. Okay, it's a little stilted, but remember, that was 1912. It's pretty strong, angry language for the time period. Pretty much politicians have used bankers as a foil since the country was established. I suppose it's better for politicians to misdirect our rage than to let it go where it should. You know, at the politicians. So the kill the bankers message won the day, and in a perversion of huge proportion, the Democrats, having run against central banks, then created their own wacko central bank. 1913 marked the passage of the Federal Reserve Act, signed into law by President Wilson. This time, the new Central Reserve Bank, the new central bank, was called the Federal Reserve System, and it had 4 major responsibilities. Now, those are to provide for the establishment of Federal Reserve Banks, okay, to furnish an elastic currency, all right, to afford means of rediscounting commercial paper, to establish a more effective supervision of banking in the United States, and other purposes. Always this one. So where central banks have been built to establish credit for the government and to hold tax receipts, the new Federal Reserve was a nongovernmental regulatory body. That seems a little odd, doesn't it? Oh, wait, the wacko ideas are just getting started. The Fed started off with a pretty broad mandate, and rather than charter them as a bank, the new law established the Federal Reserve System in perpetuity. Apparently, congressional Democrats, who had for 150 years opposed a central bank, found a formula they liked and made it mandatory forever. These responsibilities expanded every few years, and in 1978, the Humphrey-Hawkins Act expanded them significantly. The enhanced objectives for the new Fed now include to achieve economic growth in line with the economy's potential to expand, a high level of employment, stable prices, meaning stability in the purchasing power of the dollar, and moderate long-term interest rates. So what went from a strategy to consolidate 50 or more different currencies into one and to provide credit for the government should it need it became a regulatory oversight group and eventually a system to provide for a high level of employment? I'm surprised they didn't add do the laundry and water the plants while they were at it. And that's how our current central bank, the Federal Reserve, got its start. Tell truth to power. Hear the real story. Think for yourself. Join the conversation at econmilitia.com. Take back your inalienable rights.